Joining us with this week's Ag Week Market Extra is Kristi Van On. And Kristi, the grain markets right now certainly have factored in a lot of negative news, but are kind of trying to find a bottom here, aren't they?
Yeah, there's a lot of stories that go into it, but talking about the corn market, you came and you got two closes below that 350 level on D's corn. That's a technical indicator. You could come down to a little bit of a lower price count. 341 is what you're looking at. We found support there a couple times, and that's one thing, is that looking to say, is that a bottom into this market? Are you going to find some support? The market feels pretty confident that you can say, hey, we have found a bottom for the near term in both corn and wheat. But when you look at soybeans, it's all dependent on that trade deal. And that's the biggest thing, is you don't know when that's going to happen. It could happen this week. It could happen a year and a half from now. You got to look and see what happened in NAFTA, how long it's been taking to figure out this. That could be a long haul. And so until you really can feel confident in trade talks for soybeans, you're probably limited to be able to say, hey, for sure you have a bottom into this corn and wheat market. What we do know, however, is on a technical side of things, corn looks good, wheat looks good, demand is running very good. Export sales have been great. We're actually running ahead of pace for where we typically are for the corn market. That's very friendly as well. And you're starting to get those problems throughout the world as far as wheat production, and that helps us as well also. So on those two markets, you feel confident, but until you can come in here and get a little bit of a better feeling about how this is going to go between China and the U.S., we're starting just to struggle a little bit into the bean market.
Yeah, and that has pushed us into some multi-year lows, obviously. So if we get a deal, how much of a rebound could producers actually even expect?
I really think as soon as you get that deal, you're going to have a jerk reaction right off the bat to get a very hard rally. I wouldn't be surprised if you could put a whole dollar on within a week as far as making a trade deal, but then you have to kind of take a step back from the emotion and say, okay, we got this trade deal. Now what's going to happen? Because even though you could get that trade deal, we have a very, very large domestic carryout into soybeans. And one thing is saying, okay, USDA hasn't factored in demand from China. Well, we're only actually factored in 70 million bushel below last year's demand. And so really, you're not really taking that big of a chunk out of the carryout right now for waiting on trade talks. And that's one thing to watch is, okay, if we get a trade deal, does that trade deal say that China's going to come in and buy more beans? Does it say that they're going to come in and buy some corn? What aspects do you have to that trade deal? And that's going to be the biggest influencer to the soybeans. But I do think emotionally you will be able to put a dollar onto this market quite fast when you do it. And even when you start to get those rumors of China even coming and talking to the U.S., you're able to put 20 cents on it. So it's not even a trade deal. It's just the fact that it's going in the right direction. And you've seen that over the last couple of days, soybeans being able to put some support on, and that just comes from the fact that President Trump put tariffs on $200 billion worth of goods for China, and then usually China comes back one for one, and they came back with $60 billion worth of U.S. goods they're going to tariff. So it wasn't as much, and the market really took that as a positive side, not only on the grain markets, but also on stock markets. And they said, maybe this is the end of the tunnel. Maybe you're coming in here and it's not going to be as ugly as we thought it was. And just that positivity around the market's able to support the bean market.
Now, the basis levels have been historically wide, and so that's causing a lot of producers to store here, especially soybeans, which we haven't seen for the last couple of years at harvest. So once we get a bounce, do you think some of that grain will move out of those storage areas or not?
Probably not right away. One of the biggest things I would suggest to a producer is just be very open with your elevator if you think you're bringing beans in. Talk to them about the likelihood of forcing to cash out. Now, an elevator is not going to know for sure, but you do have those circumstances that there's nothing an elevator can do. They don't have the storage for the beans. We've seen them have to pile them before, and that's ugly when it comes to the bean market, and they could force you out for cash at harvest delivery. A lot of the other elevators that have used typically 5 cents a month for storage have moved to 7 cents a month, and even that is a good move. If you could see that 7 cents, because basis levels could get even uglier coming into harvest if we don't have a trade deal. But to be honest, until you can really work that out and get them over here, you're probably looking at closer to December before you can really start to see that basis improve.
The other couple of keys for bottoming the market, at least on the corn side, will be demand, and exports have been running ahead. And also we have the funds, which are really short in both corn and soybeans right now, and what they do.
Right, so you have a lot of friendly aspects coming, especially into corn and wheat. It's just, and even when you look at soybeans on a couple of those aspects, but the biggest thing looming is the trade talks. Until you can figure that out, it's just kind of stifling the market and having a little bit of problems. But like you said, export demand has been huge into corn market. We're running ahead of pace. That's fantastic for us. And even, on a local side of things, if we can get a trade talk with China and get some things figured out, that brings a lot of demand over to the PNW, and that is great for North Dakota basis, Western Minnesota basis. That really helps us out that they pull that grain from that direction. And even you could see that indicated this summer, early summer, our basis levels were similar to what you see in the big I states for a lot of areas. And typically that is not the case. So if we can get that trade talk and get that demand over, especially will be friendly for North Dakota farmers.
I know that you are friendly, the wheat market, and it's a lot because of some of these global issues. The market really hasn't taken off on that news, though.
No, it seems like you've been having a lot of selling pressure as soon as you can put 25 cents onto this market. And so you've been struggling there. Overall, you're probably going to have to wait until you really hear what this freeze damage did to Australia before you can really get going. Also, you have to talk about the fact that EU has consistently been lower than where USDA is. So last week, you had a lot of pressure on the market once USDA chose to not change world demand as far as those wheat numbers go. You really were expecting to see a reduction in world numbers as far as wheat goes, and you didn't see that slight uptick actually, and that caught the market off guard. And so you have to say who is right here, USDA or EU on private estimates. Maybe they find a middle zone, but regardless, you are having USDA a lot higher than where a lot of private estimates are. So overall, until you get that, the market's probably a little bit capped off until you can get a little bit more of a grip as far as corn, turning it and having some even friendlier technical side of things. Wheat is probably stuck to a degree.
Or if Russia puts an export tax on, and there's still a lot of speculation about whether that'll happen, right?
Yeah, absolutely. And so that would bring even more demand here to the U.S., and we need that. We need to get our demand up and running. We've had it strong for corn. It's been okay for wheat. But really, even when we have problems, we quickly outprice ourselves in the world demand side of things. One thing to also watch is U.S. dollar. It's starting to trend back down a little bit. And if we can get that back down to its lows, that's very friendly towards our crop prices for other people. And that makes it cheaper for them because of currency rates. And then that could bring even more demand too.
The cattle market has had a sharp breakout here. We've gotten above some good resistance areas, but now kind of moving into some other areas. So the cash is going to have to push us?
Yeah, so you need a little bit of it's two things, cash being the biggest one. So you've been able to drive this market up, stuck at some key resistance points. You made the first price projection onto live cattle, but when you look at feeder cattle, starting to kind of stuck there, and we need cash to push that a little bit higher, or demand to push it a little bit higher as well. You see the stock market taking off with the news that China didn't come back with $200 billion. That's going to be friendly towards cattle prices as well. And so there's a couple different ones you put into that, but the biggest one is going to be we need to make sure cash follows along with this futures rally.
African swine fever, that seems to be pushing the hog market. How far can we take that market on that news, even though cash is starting to appreciate?
Yeah, so the biggest thing is just continue to see that demand come over. So one big thing is just seeing that demand come over from Asia, starting to see it come over from the U.S. We also are importing pork still from some of those countries. So if you saw that shut off because we don't want to bring that over to the U.S., that could be another thing to watch too. You do see the cash starting to come up. You're also seeing on a technical side of things, on a futures side of things, profit taking after the market was aggressively sold off. So that's been friendly as well. But you've really appreciated this futures price quickly. You need to see and make sure that demand comes over.
Are you suggesting hedges in some of the 19 contracts, even where we've gotten like even above $80 or not?
Yeah, $80 is a key area to start looking at some hedges. That is one of the biggest things, but also just to be a little bit careful on the side of things, making sure that demand comes over, making sure you're not going to get ran over. But really, $80 is a mark that we like to start being aggressive in marketing.
Thank you so much, Kristi Van On, joining us with this week's Ag Week Market Extra.